Good morning, everybody. I hope you guys are well. Today is Wednesday, February 8th, 2023. Stocks are down just a little bit this morning after getting a nice bump from Jerome Powell yesterday with his interview with David Rubenstein. At the DC Economic Club, I did a quick 83-second update based on the results of that and posted it last night if you want to check that one out. But really, it boiled down to Powell did not give the Bears the Jackson Hole moment they were hoping for. Stocks initially rallied. Then Jim Cramer said this is a bull market. And of course, stocks sold off. And then they were to claw back those gains, ending up the day sharply higher. Right now, they're selling off just a little bit, pretty much right to the level they started at when Jerome Powell started speaking yesterday. So actually, just a whole big nothing burger. And then, we had the State of the Union last night, and I'm sure that was a very entertaining, riveting hour of television. I didn't catch the State of the Union. I had to return some videotapes. So sadly, I missed that one. So I have no highlights to provide to you guys. I'm sure it was a clown show anyway, a circus act on both sides of the aisle, mind you. All right, with that, we are going to shrink my melon of a head. Let's see what's going on in markets this morning. We've got the S&P is down about 0.5% or 21 points at 4,141. The Dow is down 23 points or 0.07%. The Dow was down the Dow was down 100 points pre-market. Looks like it's getting a little bit of a bounce at the open here. NASDAQ is down 40 or about 0.34%. So are we going to have another one of these days where the futures are pointing to a down day and then stocks just bounce at the open and head higher all day long? We'll see. It looks like that's been the way of things for a while lately. Right now, the DXY is down again at this moment, 103.3, down about 13 basis points. Check out the movement in the DXY. While Powell was talking yesterday, big drop down and then a spike back up, and then it ended up coming back down anyway. Over in the bond market, we've got a mixed bag in bonds right now. Yields are really not moving very much, a couple of basis points plus or minus one or two. The 10-year Treasury yield is at 3.66, down 1 basis point, so not a lot happening in the bond market today. Commodities, we've got gold is at $18.91, up about $6.50 or 0.35%. Silver at $22.40, up about a quarter, 1%, looking pretty good in silver. WTI crude is at $78.22, up another dollar this morning. Crude has had a pretty good couple of days. Let's check out the oil chart here. We had broken down from this wedge pattern that I drew about a week and a half ago. We broke down below it. We lost the 50-day moving average, but then yesterday we had an inventory report came out. Oil popped right back up. We actually broke back into that channel, and we recovered the 50-day moving average. So oil is back in this trend right now. The RSI is also back with this prior trend here. Now, that was really because of this. The API crude oil stocks change came out yesterday. We had 5 consecutive weeks of significant inventory builds in oil, something I had covered a lot on this channel. Well, last week, we finally got a break in that trend. This hit just yesterday. Stocks of crude oil in the United States dropped by 2.184 million barrels for the week ended February 3rd, following a 6.3 million barrel rise in the previous week. So it's only one data point, doesn't make a trend, but at least we didn't get another multi-million barrel buildup in oil inventories. And of course, oil futures saw that report come out and up it went. We get the EIA numbers on Friday, so we'll see if those fall in line with the API numbers. Also going on in commodities right now, we have got natural gas at $2.52, down about a nickel right now, or 2.13%. Looking at natural gas here, we're getting close, guys. We're getting close. I've been drawing this chart a lot lately. We're right there at the 9-day moving average, still not above. According to the Bravo 9, we are waiting for one full green candle above the 9-day moving average before initiating a position on this one. And still not there. Still not there. Been watching this one for a while. I know a lot of people want to make this trade. I'm still not touching this one. I'm waiting for that signal. All right, moving on here. We got this news out today. Mortgage applications. We got a nice bump week over week in mortgage applications, obviously due to lower interest rates. Mortgage applications in the U.S. surged by 7.4% in the week ended February 3rd, 2023, after plunging 9% in the previous period, with applications rising for both refinancing, almost 18% surge in refis last week, and purchases up 3.1%, according to data from the Mortgage Bankers Association. All right, so that's interesting here. Obviously, it's got a lot to do with the 10-year yield. Now, right up until last week, we did have falling interest rates, especially in the 10-year yield. We came all the way down here. We just barely touched the 200-day moving average. We got a nice bounce off of that 200-day moving average, however, and now we've had a couple of consecutive green candles here. We're back above this declining trend line that started back in November. Does this mean this trend is now broken, or are we still heading lower? We'll see if we get a back test. But suffice it to say, after these couple of consecutive days of higher yields, we may not get the surge in refis next week that we saw last week. And that's also important because Jerome Powell mentioned something yesterday while he was talking. David Rubenstein was asking about quantitative tightening and the unwinding of the balance sheet. And Powell had mentioned that the active selling of mortgage-backed securities was not something that they were even considering. That's important because the Fed is unwinding their balance sheet, but remember the Fed balance sheet consists of U.S. Treasuries and mortgage-backed securities. And they've unwound a significant portion of their U.S. Treasuries, several $100 billion. But look in here, this is at the St. Louis Fed website. This is showing the U.S. Federal Reserve's holdings of mortgage-backed securities. Now, that peaked at $2.74 trillion worth of MBSs, and right now it's only at 2.62. So they've only managed to unwind, in almost a year, they've only managed to unwind about $100 billion worth of these MBSs. They still have 2.6 trillion sitting on their balance sheet. So at this rate, it'll take them more than 20 years to unwind all this stuff. And Powell said yesterday that they're not even considering actively selling it. So they're just letting these MBSs mature over time to let the holdings unwind. Well, when people refinance their homes, home loans get paid off. So some of these MBSs tick off of the balance sheet. So if this surge in refis continues, we could see an acceleration of the unwinding of the Fed's balance sheet. But the fact that the Fed was so dismissive that we're not even considering selling, that tells me that they're worried about liquidity in the mortgage bond market. So keep an eye on that. That's an important topic right there. All right? I don't think we've heard the last of mortgage-backed securities this year, especially not with the near frozen state of the housing market. We've got a little bit of break in interest rates, as you can see from this chart in the 10-year Treasury, and the housing market is showing a few signs of life, but also keep in mind it's mostly refis. And if people are refining, why would people refi their houses when the average mortgage rate is about 6.1, 6.2%? My guess is they're refining their house because these are cash out refis, and they're using that cash to either finance a lifestyle they can no longer afford or to pay off their credit cards, which have been run off because they're trying to finance a lifestyle they can no longer afford. Either way, a surge in refis at a 6.1 or 6.2% interest rate doesn't really spell economic success to me. I worry about that. Something to keep in mind on, or keep an eye on. Watch that MBS market, folks. All right, elsewhere, we saw this one. Maybe we get a little bit of relief. Wholesale egg prices have collapsed, and why consumers may see some relief. We're not going to get too much into the why because the conspiracies get a little nutty on this one, but take a look at this one. Wholesale egg prices have come down more than 50% since peaking in December. Now, this is the wholesale prices. This has nothing to do with what you're paying in the grocery store, but the retail price should follow the wholesale price eventually. Emphasis should. The longer it takes before those retail prices come down to match this, the more and more credibility some of those conspiracy theories will have. But really, the birds' migration season is kind of behind us now, so this high-path avian flu is no longer spreading as rapidly through some of the bird populations, and so the effect on the egg market isn't happening. I know there's a lot of talk out there in other circles about conspiracies involving the feed, and look, it's the 2020s. We're not going to dismiss anything out of hand here right now because that's almost daring it to be true, but at least for now, wholesale prices are coming down sharply, maybe a little bit of relief from the inflation story. Also going on right now, we got more stories of layoffs today. Right now, we've got Zoom, 1,300 employees, or about 15% of its workforce. Nothing too surprising to see Zoom laying off employees, right? This was one of the big pandemic and the work from home stocks. So to see Zoom laying people off, not a big surprise there. Zoom, they probably grew a little bit bigger than they should have. And now that the situation from 2020 is behind us, Zoom is coming back down to earth. All right, so that's not a trend, but again, it's another 1,300 layoffs. It's another story in the big pile of anecdotal layoffs. And you can add eBay to that list also. This just came out this morning. eBay is the latest tech company to announce layoffs. They are laying off 500 employees globally. as a result of the macroeconomic environment. So there's another one, folks. eBay and Zoom, you can add to the list, a growing list of layoffs going on around the world. All right, guys, I just want to say thank you very much for your time watching. Thank you to my Patreon supporters. Today is Wednesday, and I'm looking forward to talking to you guys on my Zoom call at 4 p.m. Eastern Time. For the Patreon folks, there is a link down below should you feel so inclined. I want to say hi, Mom. Hi, Dad. I love you guys. And everyone, until next time, live small and dream big.